Good evening, guys. It's Saturday, February 18th. My name is Dave Coker, and welcome to Talking About Finance. And once again, I welcome you. I'm honored to be here with you. Once again, we come together. Men and women, seekers of cash, investors all. We only want one thing, a humble thing, something that people throughout history have wanted. To be in control of our financial futures, of our destiny. And unlike countless generations and uncountable numbers of our generation currently, who never achieved the goal, who never realized their nirvana, never saw the promised land of financial independence, we have a map, we know the way. We realize becoming independent financially is far, far easier than the self-described trading gurus, options gurus, investment gurus, multi-level marketing gurus, crypto staking gurus, all these false prophets. Well, my friends, the list of false prophets is not only long, but it's easy to identify the false prophets, and for one simple reason. They leave financial chaos in their wake. Be wary, my friends, of anyone who offers to help you achieve financial independence but wants to be paid. They're just using you in their goal to become financially independent. And that's totally unnecessary because we have the formula, the simple recipe, the easy approach to achieve financial independence. We only buy assets that pay us to hold them. We buy these assets and hold them forever. We only sell these assets if there's a negative chance, an adjustment, if you will, to the cash flow we will receive for owning these assets. So buy and hold and reinvest the cash flow into more cash flow paying assets. That's the one way, the only way to achieve financial independence. But you all know that. And that's why you're here. So now that you're here, let's talk about finance. And last week we see the S&P 500 finished down about 28 basis points on the week. 5 sectors: consumer discretionary, utilities, staples, industrials, and communication services all beat the S&P 500. And unfortunately, 6 sectors finished down. Financials, information technology, healthcare, materials, real estate, and energy all lagged the S&P 500. There was a big swing in energy from last week, and we'll see if we can figure out what happened here. The VIX traded down to 20.02. It started the week at 22.05. And it's interesting, the VIX still trades down. And you know my view, guys, as well as the view of many other longtime market watchers. It's too complacent. Bear markets aren't over until we see a blow-off in share prices and a big spike in the VIX, hopefully approaching 40, if not above 40. So is this time different? Yeah, how many times have I heard that argument? The 10-year note closed the week at 3.81%. It's up about 1/10 of 1% week on week, down about 1/10 of 1% year to date. And we're starting to see solid returns in fixed income now, and that will impact equities going forward. Oil closed the week at 76.60. It's down about 3.9% week on week, and now it's down about 4.6% year to date. And once again, yesterday, I bought Bitcoin and Ripple as I do every Friday. I use cash flow from the rental properties, and remember, one Bitcoin is divisible into 100 million sats, or satoshis. Think about a pound and 100 pence. There you go, you understand now. Bitcoin is divisible into 100 million sats. So just buy whatever you can afford. 10 sats, 100 sats, 1,000 sats, 10,000 sats, 500,000 sats, doesn't matter. Buy Bitcoin and never plan to sell. Buy Bitcoin regularly and ignore the price. That's what I do. I only got an idea about the price of Bitcoin when I see it in the media, or when I buy every Friday, I get more or I get less. And I say, oh my gosh, the price has gone down or the price has gone up. If you do this, you'll be startled someday at how much Bitcoin you have and how much that position is worth. That is what happened to me. But enough of that. Let's check in on what me and my buddies, about 50 or so money freaks, investment bankers, what we talk about all week on a private Telegram channel. As you know, this is the kind of stuff I like, so bear with me. While it might be an acquired taste, I can guarantee you'll soon be just like us. This, my friends, is what we call Global Wall Street. 7 slides for 7 days. So let's go. Oh, and check this out. This is the wildest thing. Now, a good friend of mine, she works over, I'm not going to name the bank, but she works in the area that does IPOs. Stripe is circulating a deck. They're planning to do an IPO, but they need some money first. Yeah, you got to wonder why they didn't do an IPO before. This is got to be one of the worst times to do an IPO. Oh my God. And the deck they've circulated values Stripe at about $55 billion, but they need some cash fast. And that's why they're doing it. Will that help you get some confidence in Stripe as a viable business? I'm not so sure. I think the underlying business is sound, but management is a major, major component that I would have a problem with. So we have to pay attention to this. And you know I love this TikTok investor group. It's like the most amazing thing. You see, oh my God, the worst possible advice ever. And this woman, of course, she's a realtor. I don't know what's going on here. I really don't want to be judgmental, but I think it's an express train to bankruptcy, as I said. What she's advocating is that people save up $14,000 every year, and on that basis, they can buy a $400,000 property. I looked at the numbers. I don't know. It's like a 3.25% down payment. I don't know what in God's name is going on here. I don't know where they're getting the money. Well, I do know where they're getting the money, and you don't want to be getting the money in that sector. And she's further advocating you do this every year until you're 30, and you'll have enough cash flow to retire forever. No. I got a property business, guys. These people are mortgaged to the hilt, and they have very little control. Not like me. I pay cash for property. I have full control. So this is really interesting. I just don't like debt. Debt is a 4-letter word, so I try to avoid it, like all 4-letter words. And here's an interesting one. The media. All we hear in the media is about how the labor force has shrank, the boomers are retiring, 18,000 boomers a day are retiring, and this is putting upward pressure on wages. And then you look at this statistic, it's like, holy cow, what's going on here? Where are these people coming from? I have no idea what's going on. I don't know why the labor force is supposed to grow so rapidly, but maybe the millennials and the Gen Zs are a little friskier than we thought, right? You guys getting it on or what? Huh? You making babies, huh? I don't know exactly what's going on. It's interesting to see the forecasts out to 2050. It's really fascinating. And guys, we talked last week about the big pop in AI stocks and the big pop in AI crypto. Well, check this out. Once again, bubbles are meant to be popped. We saw it with NFTs. We saw it with the metaverse. Before NFTs and the metaverse, of course, we saw it with solar panels, with marijuana stocks. Look at this. AI. What's going to happen there? It's anybody's guess. But I know what's going to happen. Those valuations are absurd. We looked at it last week. Check out last week's video. Ridiculous. There's no way they're going to be sustained. But enjoy the party while it lasts. And I got some interesting comments. People were asking me in the wake of all the tech the tech stocks surging, the AI stocks surging, was I still happy holding gold? And they were sort of implying, that I made a mistake by moving 71% of my retirement assets into gold gold and silver, I should say, in 2019, March 2019. Guys, not only do I name the trade, but I name when I put the trade on. Compare it to these other idiots, I'm an idiot too, who say, oh yeah, I put this trade on, book profits, blah, blah, blah. All this garbage, this ridiculous stuff. I named the date, I named the price. March 2019, I went long gold and silver, 71% of my retirement money. I was asked, am I still happy? Look at all this money, they said. You could have made in AI or in tech. You should know better. Guys, I do know better. Yeah. What are the central banks doing? And you can think what you want about central banking. Simple fact is, they're buying gold in a huge swath, huge acquisitions of gold. So yeah, I'm quite happy to hold gold. Thank you very much. And this week was Valentine's Day. And on Valentine's Day, the message was break up with fiat currency. Did you hear about the nightmare that's down in Nigeria? Oh my gosh. This is another reason to break up with fiat. And of course, Nigeria, they're forcing you to, but it's really hardcore. Down in Nigeria, and you guys know I lived there for a few years. Down in Nigeria, the central bank introduced a CBDC, a central bank digital currency. At the same time, they outlawed Bitcoin. Well, of course, searches for how to buy Bitcoin over the internet surged, and we talked about that about a month ago on a video, that we saw these searches surge. And at the same time, it's wild. When people didn't want the Naira, the e-Naira as it's called, and check out FinTech Flash News, my blog, for more details. When people didn't hold the e-Naira, they canceled all the paper currency. Okay. And of course, the Nigerians are very vigorous people, and they're rioting. So break up with fiat before it's too late. And here's a little primer, guys, on how Bitcoin works. Buy your Bitcoin. If the price goes down, if it looks like the house is on fire, don't worry about it. Just buy more. Hold on to what you got. Hodl, hang on for dear life, and just buy more. And months later, many, many months later, who cares? You'll have a pleasant surprise. Once again, guys, thanks for your time. I hope you have a wonderful week coming up. It's going to be a very profitable week. Take care. Oh, yeah.
Bye.